What is good, Tesla family? It's Ray J back with another video. And this one, I'm going to break down what's going on with Tesla stock and what you should be watching for going forward. I'm going to talk about what the technicals are suggesting, what's going on with their deliveries, and what you should be watching for, what's going on with the economic data that just came out, and also what's happening to Tesla's short interest as we have some very important developments. I'm also going to talk very briefly about SPY and talk about what you should be watching for. Before I break things down about all this information, though, let me just mention a couple of things. Firstly, I am not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And finally, don't forget about the Moomoo link. The offer ends very soon. If you deposit $100, you're guaranteed 5 free stocks with the $100 cash reward. The offer ends in just 10 hours, so check it out before they run out. With that out of the way, let's get on with the video. Tesla's up about 1.66% for the day, continuing to uptrend over the last couple of days, and it's looking pretty decent so far. But the real question is, will Tesla continue to pump, or will Tesla end up getting a rug pull? This is going to depend heavily and almost entirely on their deliveries report. Looking at the current data, right now we have another analyst that came out and they're saying that Tesla should be giving us around 448,000 deliveries in total. That's up 6% from the 422,000 they got during the last quarter. That would be pretty awesome in my opinion. That could help Tesla pump even more. However, depending on how this goes, if Tesla comes a little bit short on the expectations between 440 and 450,000, this could lead to the opposite reaction. So please be well aware that we are expecting a record for Tesla, and they're most likely going to get the record for sure. But the real question is, to what degree do they beat expectations? That's going to be a very big factor in determining how Tesla ends up moving in terms of its share price and for the company moving forward. If they meet this expectation from this analyst, or like this prediction, it's not really the expectation, more of like a prediction of 448,000 vehicles. If they meet that, then that's going to put Tesla's total deliveries closer to about 870,000 units for the year, which would be very, very bullish. Now, the reason why that's very bullish is because that's going to put Tesla get very, very close to almost 1.8 million vehicles for the entire year if they maintain these rates. And that's once again going to help them meet their target, and it's going to help them deliver on guidance. That's because the market is very, very forward looking. And that's important because when the market's forward looking, knowing that Tesla has an increased probability of meeting their guidance will help the share price go up. So that's the reason why something very, very bullish like 450,000 deliveries around there or even higher will help Tesla's share price most likely get a positive reaction. And once again, if you look at Tesla's current short interest, this is continuing to go up. What's very ironic is the Tesla short interest started going up around May time. You can see around May, they started going up and up. We saw about we were only seeing like 16 million Tesla shares shorted. Then it went up to like 15 million, 20 million. And then every day we started seeing like 50 plus million Tesla shares shorted. The more this thing started to go up. But what happened was, the reason why the short interest maintained this high position while Tesla continued to pump over the last like couple of weeks is because what they're doing is they're closing positions, then reopening them as they end up going higher. And we have other institutions basically working together, maybe not even working together, just continuing to short Tesla. And the short covering alongside the hedging that goes on by the market makers is helping Tesla pump even more. Now, as a result of this, we are still seeing a maintaining high short interest for Tesla. And we just saw about 50.658 million Tesla shares shorted just 2 days ago. So shorts are still piling in. They're still continuing to do their thing. And if they're right, I mean, they could be right about Tesla falling. But if they're wrong, Tesla could see another massive short squeeze and make some very, very bullish moves. So I just wanted to note this. Now, when it comes to the share price of Tesla, let me just note there are two perspectives we're going to be looking at. The bears out there, for all the bears who are saying Tesla's going to not do well and this and that, well, they certainly don't have the edge right now because of the fact that Tesla's deliveries, the numbers I saw so far look pretty good in terms of car registrations. Tesla will most likely get very, very close amounts of deliveries to the expectations, in my opinion, based off what I showed you guys last week. Or it could be even higher than that if you account for other countries. But I just want to note that there's still a bearish case, and you always have to be prepared for that nonetheless. The bears are going to argue, okay, that Tesla has this head and shoulders that's forming, and Tesla's going to come all the way back down to 200. You could make a very valid argument about that. And if Tesla does miss on expectations, this thing's going to come all the way down, in my opinion, very close to the lower 200s. If Tesla ends up just barely meeting expectations, Tesla could also drop. It may not drop as hard, but it could still drop even more. So just be ready for that. If Tesla only gives us like 440,000 deliveries, if they give us like 430,000, this thing could still come down. The expectations are around 440 to 450,000. We want Tesla to be somewhere in the middle or higher than that. If Tesla meets expectations on the higher end and they give us like 448,000, 445,000, or 450,000 plus, there's a good chance that this thing could squeeze all the way up to about 300 plus. And part of why I'm saying that is because the bulls, the big bulls on Tesla, the bulls are very powerful. They're going to argue that Tesla has this inverse head and shoulders like structure, right? You could quite clearly see it right over here. When Tesla came all the way down to 100 when Elon Musk was selling, we've been developing it since then. We have this potential left shoulder right over here. It's not as like stationary, but it still is technically existent. Then we have this right shoulder that's been extended, but it still is technically existent too. And then you have this potential really, really nice run up after it hits resistance, which could bring this thing all the way up to about this 300 resistance, if not 315 by the time we get to earnings. That's a possibility, and the bulls are going to argue in favor of this perspective. So there's both a bull and bear case on Tesla. Let me just note that right now I'm once again kind of in the middle, but leaning more towards the bulls because of what I'm seeing, but I'm always going to be open-minded just to be safe. Now, if Tesla ends up, for example, getting a monstrous run and you end up regretting not risking too much, but just know that it's risky to play options on a play like this. You could do it if you want. As I told you guys in the previous video, it's your choice, your own risk, but just know things don't always go out as planned. So you have to be very careful with them. Uh, Also, it's very important to note the current economic circumstances and the current circumstances for the markets, what's going on right now. Right now, there's a probability that's starting to increase a bit that money is starting to rotate away from tech and moving a little bit closer towards like financials and other sectors like that. That could be continuing. It could cause a slowdown in tech, but not a guarantee just yet until we get more data. And what's going to dictate the market over the next couple of weeks is not just going to be technicals, it's going to be earnings. If earnings are very strong again, we could see SPY continue to break out and start breaking above these highs. But if the opposite happens and we get some weak earnings from like Apple and other companies, the opposite could happen. The market could get a rug pull. So just got to be careful. Tesla has its earnings, I believe, on the 20th or around that period. And then we have Apple's earnings around like the 28th or so, or 25th, I forgot. But it's basically near the very end of July. We're getting very close to it. We're about 3 weeks away from Tesla's earnings. It's going to be very exciting. But anyways, now let's talk about some economic data. I didn't get a chance to mention this in my previous videos. Just so we're clear, as I mentioned in my first video, the PCE report was pretty good, meeting all expectations, if not lower than expected. And the most important part of it was the core, which ended up being at about 4.6% versus the 4.7% forecast. That's a very good sign because so far, Jerome Powell caused a lot of fear by talking about how hot core tends to be, and it is still kind of hot at 4.6%. It's very, very sticky at these high levels, but it is a little bit lower than expected, and the market loved to see it. The market used this to pump, but the market already knew that these numbers would come out because this is the May data. And on top of that, the market also knew that this is going to be the end of the quarter, the end of the first half, and the end of June all at once. So we have this like confluence, which is going to be used by the markets to continue to pump. And for that reason, the market just continued to hold up as this is going to help improve a lot of balance sheets and things like that. But anyways, going forward after that, we had the Chicago PMI reports. This was once again very close to what the forecast was, a little bit lower, which is showing some weakness in the economy, but the market didn't respond too much to it. But then we had the Michigan Consumer Sentiment Report, which was better than expected, showing that consumer sentiment is going up and it's a lot more positive. Inflationary expectations were very close to expectations too. Close to the forecasts. And then after that, we had the consumer expectations final, which were once again very close to the forecast too. Inflationary expectations were also the same. So overall, consumers are expecting inflation to either cool off or remain very much similar to where it is, but the expectations are starting to go down compared to before. So that's a very good sign for the economy too. And when this tends to happen, right, this could be because of the fact that many people are noticing that prices are just not going up as fast as they used to. That could be one of the factors, or it could be something else. But once again, I'm not saying the data is 100% accurate. I'm just stating what it could be suggesting. But anyways, looking at Tesla, this thing is continuing to look pretty all right. It is strong from a technical standpoint, but technicals just don't matter at this point. We'll just have to wait and see if Tesla goes all the way up to 300 or if Tesla gets a rug pull and comes all the way back down closer to about 224, if not even lower than that. I don't know which way it's going to go, so we're just going to have to wait and see, and you just have to be ready. The odds do favor it going up, but just to be safe, it's always important to just be prepared for this and just to be very, very conscientious. Now, for SPY, this is going to be the last thing I talk about. I'm a little bit more concerned about SPY and the QQQ because on SPY, technically, there is a bearish divergence that's developing. Looking at this current trend, we were in overbought territory on the 4-hour time frame. There's not a true sign of weakness just yet, but there is a bearish divergence that's getting much, much stronger. So we have this bearish divergence on SPY, and there's a chance that SPY could start to downtrend a little bit. You have to remember that the market is going to be open for only half a day on Monday, closing at 1 p.m. in commemorance of the 4th of July. And then on the 4th of July, which is going to be Tuesday, the market's going to be closed. So we only have half a day on Monday. Market is then going to be closed on Tuesday. Then we go back to normal starting on Wednesday for the week. So there's going to be less trading, less volume, more people on vacation. There's an increased probability of the market slowing down because of this. We also have a bearish divergence once again on SPY on both the MACD, the signal line, and also on the RSI, suggesting that we could see a cool down. So you're going to be watching the 5 EMA as our support, very close to that 442 level. If that breaks, there's 440, then the gap fill is going to come after that. But the odds do favor a slight cool off in the markets. I just wanted to note that on a technical standpoint. For the QQQ, this could also happen, but I do believe Tesla could dictate this as well. And you could argue that this thing is not done pumping just yet. Who knows? Maybe it's going to be Tesla that pumps this up, maybe not. There's no guarantee just yet. But I just want to note that there's this possible inverse head and shoulders that's still existent. Maybe we get one more pump before this thing starts to cool off a bit, or it might not happen because of what's happening with all of the things going on, with potential earnings expectations and the weekend and things like that. So we could see this completely change, could see the trend completely shift. We're just going to have to see if this could hold the 5 EMA. If this holds above it, this 368 supports, then this thing has the potential to bounce. If it ends up breaking below it, there's that gap below, which could get filled. So we just have to be very careful for next week. I'm still open to the possibility of this thing pumping more, possibly because of Tesla. I don't know for sure. And I'm just saying this based off the possibilities. There's a possible inverse head and shoulders that's not complete yet, so there is a chance it's going to just keep going off. So if it breaks the high of the day, then I'm going to be looking for this like 372 zone resistance, which is going to be the next supply zone. I'm going to watch this very, very carefully and see how this ends up moving. But other than that, guys, I want to keep this video very short. For Tesla, I can't really say too much about it. There's a possible inverse head and shoulders on Tesla. Of course, you could argue that on the 4-hour time frame, on the much smaller time frame as well. So there's so many different interpretations of this chart. I'm not worried about any of them. I do believe there's a high probability Tesla's going to beat on deliveries expectations, and Tesla's going to likely try to pump, but it's not a guarantee, and it's very important to manage risks during times like these. Always be properly hedged, or if you are betting on Tesla either beating or not, be prepared to lose the money just to be safe. If you make the money, great for you. It's kind of like a gamble in a way, maybe like a more like educated presumption, but like I said before, it could be risky. So just be very careful, because even if Tesla does well, it could still drop if it does not beat expectations by some massive margin, or if it just barely like beats them on like the lower end. You just have to watch it carefully. So until then, I'm going to make a video tomorrow and talk more about Tesla and their potential numbers. And until then, I hope you guys have a very awesome weekend. Thank you for listening. Tesla to the moon, as the long term is still incredibly bright. I'll see you guys tomorrow for the next video. Thank you and peace out.